Hello everyone. My name is Neha Singhania and I'm a partner at Dharmen Srivastava and Associates. Today in this video, we will be discussing important relief measures provided by the government regarding GST for the businesses to cope up with the difficult times of COVID-19. These changes in GST are brought in by releasing a series of notifications by notification number 30 to 41 in order to provide relief to the taxpayers. Measures like waiver of late fees, interest for delayed filing, extension of validity period of e-way bill, etc. are some of the changes as part of COVID-19 relief measures notified for businesses registered under GST. Let's take a look at each of the changes. The most important relief given by the government is reduction in the interest rate and waiver of late fees on delayed filing of GSTR 3B return by categorizing the assessees as follows. Our first category being an assessee having a turnover of more than 5 crore in the preceding financial year. The second category being an assessee having a turnover of less than or equal to 5 crore but more than 1.5 crores. And lastly, an assessee having a turnover of less than or equal to 1.5 crores in the preceding financial year. That for a first category of assessees, there is no extension in due dates for filing of GSTR 3B returns. However, for the month of Feb, March, and April 2020, if the return is filed up to 24 June 2020, then no late fees and penalties shall be payable by the assessees. The government has provided a relief in interest rate where there shall be no interest for the first 15 days calculated from the due date, and after the period of 15 days, the assessee has to pay interest at the reduced rate of 9% as against 18% per annum as provided under section 51 of the CGST Act, provided that the condition of GSTR 3B is furnished on or before 21st June 2020. Let's take an example to understand it better. As per GST law, due date of GSTR 3B for the month of March 2020 is 20th April 2020. Now, as per this notification issued, the assessee can pay tax till 5th May without any interest being levied. After 5th May 2020, the assessee has to discharge his liabilities along with interest rate at 9% per annum, provided he files his GSTR 3B and pays tax by 24 June 2020. No late fees and penalties required to be paid in such a case. However, if the tax of March 2020 is not paid by 24 June 2020, then in such a case, the relaxation of 15 days and reduction rate of 9% shall not be applicable, and the assessee will have to discharge their liabilities along with interest at 18% per annum from the due date, late fees and penalty, if any. Further, moving on to a next category, that is an assessee having a turnover of less than or equal to 5 crores but more than 1.5 crores in preceding financial year, then there shall be waiver of interest, late fees and penalty for the month of Feb and March 2020 if the return in Form 3B is furnished on or before 29 June 2020, and for the month of April 2020 if the return in Form 3B is furnished on 30th June 2020. And a last category, that is an assessee having a turnover of less than or equal to 1.5 crores in preceding financial year, then there shall be waiver of interest, late fees and penalty if for the month of February the GSTR 3B is filed till 30th June 2020. For March, GSTR 3B is filed till 3rd July 2020, and for the month of April, it is filed by 6th July 2020. We have discussed compliances for the month of Feb, March, and April 2020. Now, what about May 2020? So, in that case, the government has provided extension of due date of GSTR 3B for the month of May 2020 by notification number 36/2020. The extension has been provided in a staggered manner where taxpayers having an aggregate turnover of greater than 5 crores in the previous financial year, the return in Form GSTR 3B shall be furnished for the month of May on or before 27 June 2020. Whereas, where the aggregate turnover of an assessee is up to rupees 5 crore in the previous financial year, then for the following states, the due date shall be 12th of July 2020, and for the following state, the due date shall be 14 July 2020. Now moving on to our next relief is relaxation in input tax credit. As we all know, recently government had announced amendment in Rule 36(4), wherein the assessee is only eligible to take credit of the matched invoices in GST or 2A along with 10% of the matched credit, but should not exceed the total eligible credit of the taxpayer. This notification has resulted into monthly GST or 2A reconciliation with books of accounts and has also blocked the working capital for various assessees. Now, however, the GST Council has provided a major relief due to COVID-19 pandemic, where the ITC for the month of Feb to August 2020 can be availed as per the books of account. There is no need to reconcile with GSTR 2A for those months. But during the month of September, ITC claimed has to be matched in a consolidated manner with GSTR 2A, and if there is any excess claim of credit, the same needs to be reversed. Let me further explain you with an example. For example, an assessee has inward supplies of rupees 1 lakh during the period of Feb to August 2020, and the same has been claimed as credit in GSTR 3B due to the discussed notification. Now, for the month of September, the ITC as per books of accounts is rupees 10,000 and the amount matched with GSTR 2A is 9,000. Now, as per Rule 36(4), the assessee is eligible to take credit of 9,000 plus 10% of 9,000, that is 900, resulting into a total of 9,900. Now for the period of Feb to August, the amount matched with GSTR 2A is 80,000. And similarly, the assessee is eligible to claim credit of 80,000 plus 10% of 80,000 being 8,000, resulting into a total of 88,000. In total, for the period of Feb to September, the assessee is eligible to take credit of 97,900, but in actual has claimed a credit of 1,09,000. So the assessee has to reverse 11,100 in GSTR 3B for the month of September and file the same. Next relief has been provided in the composition scheme, wherein Rule 33 of CGST rules talks about opting composition levy, where if a normal taxpayer wants to go to opt for composition scheme, intimation has to be provided via CMP 02 before beginning of that financial year, which wide notification number 30/2020 has been extended to 30th June 2020 by amending the said rule. Parallelly, if composition scheme is opted, ITC reversal has to be made by furnishing ITC 03, and the date of the same has been extended till 31st July 2020. Now we shall talk about notification number 35/2020, which is a quite unique one issued by the government by using powers under section 168 of CGST Act. By this notification, the due date of compliances, which falls during the period from 20th March 2020 to 29th of June 2020, has been extended to 30th June 2020. So what all compliances are covered under this? Departmental actions like completion of any proceedings, passing of any order, issuance of any notice, intimation, notification, sanction, or approval, or such other action by whatever name called by under the provisions of the Act stated above. Assessee action like filing of any appeal, reply, or application, furnishing of any report, document, return statement, or such other record by whatever name called under the provisions of the Act stated above. The following are certain exclusions provided under this notification on which extension will not be applicable, like time and valuation of supply provisions remains unaffected. Option availed under section 10(1) by a composition dealer with respect to composition levy shall stand lapsed from date on which his aggregate turnover exceeds the specified limit. Further, there is no extension in time limit for registration by a casual taxable person and non-resident taxable person liable to register. There is no extension in time limits prescribed for issuance of a tax invoice. Further, no extension shall apply to the provisions of furnishing of details of outward supplies on the common portal in GSTR 1. No extension of levy of late fees except for the exclusions discussed. This notification shall not extend the levy of any interest chargeable at 18% or 24% under the Act, except for certain specific provisions under other notifications issued. For example, if any interest is chargeable for wrong availment of input tax credit and its subsequent reversal, the same shall be chargeable even if done within the specified period. Further, no blanket extension on power to arrest, penalty for offences, detention, seizure, and release of goods, and shall be applicable as per existing provisions. And lastly, no extension in e-way bill, and the same has to be complied with before the movement of goods. Let's discuss some other common relief measures provided by the government due to COVID-19. We all must be aware about the new GST return system, which was going to be implemented by 1st April 2020. However, the same has been deferred and will commence from 1st October 2020. Secondly, the due date for filing of LUT for the financial year 2021 was 31st March 2020. The same has been extended till 30th June 2020. In short, various exporters can export under the same ARN for financial year 2020-21 till 30th June 2020. Next very important relief provided by the government is enabling the option to file GSTR 3B by EVC instead of DSC. That with effect from 21st April 2020, a registered person registered under the provisions of Companies Act 2013 has been allowed to furnish GSTR 3B through EVC during the period from 21st April 2020 to 30th June 2020. Also, manner of filing nil GSTR 3B return through SMS using the registered mobile number and verification through registered mobile number based OTP facility will be notified in due course as electronic furnishing of a return. Fourthly, validity of e-way bill expiring during 20th March 2020 to 15th April 2020 has been extended till 31st May 2020 by recent notification number 40/2020 dated 5th May 2020. Earlier, by notification number 35/2020, validity period of an e-way bill expiring during the same period was extended till 30th April 2020. However, as the time has crossed, we have an updated notification. Next, for composition taxpayer, statement of self-assessed tax in CMP 08 for quarter ending 31st March 2020 can be furnished till 7th July 2020 and return in GSTR 4, which is to be filed annually for financial year ending 31st March 2020, has been extended till 5th July 2020. The due dates of GSTR 1 for the tax period March to May 2020 has been extended till 30th June 2020. No late fees will be levied for the same. The due date of GSTR 6 for input service distributor has also been extended till 30th June 2020. Lastly, time limit for furnishing of annual returns in GSTR 9 for the financial year 2018-19 has been extended till 30th September 2020 by the recent notification number 41/2020 dated 5th May 2020. Lastly, we shall discuss notification number 37/2020 dated 28th April 2020, wherein form GST PMT 09 has been made effective on the portal with effect from 21st April 2020. Now, what is GST PMT 09? Earlier launched by CVIC, via notification number 31/2019, GST PMT 09 is the prescribed challan for relocating the falsely or erroneously paid input tax credit. For example, if you have paid CGST instead of SGST, you can rectify it by using this challan, which is known as GST PMT 09. In other words, Form GST PMT 09 now allows multiple transfers from more than one major minor head to another major minor head if the amount is available in the electronic cash ledger. Now, your major head refers to the IGST, CGST, SGST, UTGST, and cess, and the minor head refers to the tax, interest, penalty, fee, and others. As we can see, the Challan PMT 09 consists of minor and major heads. You can mention the amount of tax you wish to shift as in the details of the amount to be transferred from one account head to another. The reallocation of tax can be from the major head to the minor head and vice versa. As now, the GST PMT 09 form is on the portal and the taxpayers can transfer the available electronic cash balance to other tax heads. Now, point to note down here is that this challan is not helpful when wrongly paid challan has been utilized in GSTR 3B. It's impossible to edit GSTR 3B. The challan can shift only the amount of tax present in cash ledger. The amount, once utilized and removed from cash ledger, cannot be reallocated. Challan is used when payment is done under the wrong head but not utilized. Thank you for watching the video. If any queries, please leave on the comment section below and do subscribe to our channel for more such updates. Till the lockdown, stay home, stay safe. Thank you very much.